Good morning and welcome to the 1st of spring, 1st of September. And here we're looking at the Dow Jones, and I guess the bottom line here is that the way that I see it is that, as you can see it here, it's sitting on 10,000. It's sitting sort of deep inside it. It's not sort of bouncing off it in any strong way. So it's sort of sinking into it, and I guess the next thing here is that we'll be looking for the 10,000 to become the resistance. We haven't seen it. It's traded under there, as you can see, but it hasn't came back up and sort of retested it and been locked under there. As you can see here, that these are all, this is wave 2 here, and then this is wave 3 coming down of this particular degree coming through here. But going from wave 2 here into wave 3, there'll be 5 waves in there. So there'll be this wave here, 1, 2, and then there'll be the third wave, 4th and 5th to make up that third. Now in this little wave here, wave 2 here, going into wave 3, there'll also be 5 waves as well. So this is wave 1 of those, of the smaller degree, and then this will be wave 2 of that. And this was the ABC correction we were looking at last week, and this morning or yesterday we're looking at 5 waves down here for wave 1 and back for wave 2 here. Now, of course, this wave 2 may not be finished. It may move back up to this, maybe an A and a B and a C, but I think that it's done and dusted, so let's see how we go. But basically what we're looking for here is some evidence and proof, and the way that that will come will be seeing this price trade under here and try to get back up here and fail to get back up there and basically reject the 10,000. Now, there's probably going to be quite a few retests of 10,000 because value buyers will come in at different prices at 9,900, 9,800 and so forth. So there will be a series of retests. But at the end of the day, once that 10,000 on a psychological level, and we'll be able to see that with the retest, has actually been rejected, then the power of the third wave that we're talking about coming down here, and this is still other degrees of wave 3 coming down through here as well. It's just the 10,000 that's basically stopping it moving as quick as it should. But all the structure is there, so let's see how that unfolds. But what we're actually looking for here to get to the next stage of the bear market is for 10,000 to become the resistance at that particular point. And the opposite to this would see the US dollar index, or the US dollar itself, that should become strong at this point as well. And we'll see other currencies turn down in that view as well, which we're seeing now. So the Dow Jones here, the S&P 500 here will move down with the euro while the US dollar pushes up. So the US dollar will be central to this. So this is what we put in yesterday. It's what we're sort of looking at through here. It's the same sort of wave count coming through, just in a sort of bit more detail there, but we're looking for the S&P to come down to 1,000 here. Now, it's at this midpoint here between, this is the first minor level here, 1,100 of course, and then 1,000 midpoint is the 50, so that's going to give us the most volume turnover. But once this 50 here, 1050, becomes resistance, then you can look to short that, and the 44 here will be a trigger, and then we enter into group 1 from that point, which is 30, 20 and 10. So this will be an important point to work with as well. But this is basically what we're sort of looking for here. And the Australian market, now a little bit different from here. Now we were looking for a corrective rally to move up through here, and the 61.8% was just in at this point here. It's taken that out and moved higher, but has stayed in under these current highs back over here. So that's all well and good. So it's still under here. So we're looking at 5 waves down here. We're looking at a 3-wave counter trend. But I was sort of looking at this as not being complete. And that's why I just made it simple by putting that bearish line through here, because in this A wave and this B wave to this point here, and that can be the C wave to finish there, and then we've got 5 waves down through here, which would be the first 5 waves down, and then we've got an A and a B and a C back up through to here, and then this technically should work down through here. But I was a little bit unsure about this in here. I was thinking that this also could be a wave 1 in here, an A and a B and a C for wave 2, the 3rd wave, the 4th wave, which could come out here further, and then a 5th wave up through here to 4472, and then fold over from that point. So that's on my mind as well. But also with this particular market as well, or our local market, would need to see the base metals give away. The crude is also part of it as well, but that should follow the Dow Jones. So we're just looking for copper. Copper's basically used in everything, so it's a good guide stick. So we're looking for that. We put charts in there on the weekend. We're looking for just another little high to come in place, and then that to roll over. But I have to point out that the 4,400 is pretty much the central line through our cash market, the XJO, ASX 200, since May. So it is the balance line in there, and this market is working along that balance line. So no matter what the Elliott wave thing is that while this market is sitting above 4,400, it's basically supported and would have a bullish sort of outlook on that. But I don't want to send people bullish at this particular time of where the Dow is and where the US dollar looks like pushing up. So there's not just one market, there's like 2 markets there that plus the euro as well. So there's markets there all suggesting the same sort of thing, but we're not seeing the evidence in this particular market as well. And as you know, in the bigger picture I've been mentioning a couple of weeks ago, is that there is a possibility that the Asian markets can go up while the US markets go down. And so we've been sort of mulling that sort of idea out as well. So that's a possibility, but let's just see how this 4,400 pans out. And yeah, I mean, this is basically a retest of 4,500. So, and if this did make a new high above here, what we would have to do in this particular case is count this as an A and a B and a C wave to this point for a bigger B wave, and then a 1, 2, 3, 4, and 5 to come up through here as a C wave. So even once it gets up here, we're not fully there, but 4,500 is a midpoint. It's halfway between 4,000 and 5,000, and if that ever became support, then we would be bullish at that point. So we would expect to, you know, even if it just pushed up through here straight up, it doesn't mean a great deal at this stage because it still can be rejected at this price here. But what we would see is a corrective pattern come across there, and if that pattern became support after a little while, then we'd look to go long, and of course we would flick through most of our market to find out the most bullish patterns that were available, and there is some there as well. There's no doubt about that, but we just need that sort of confirmation. But this, while the other ones have got a bullish thing, bearish thing, this one's got a bit of a bullish thing here. So that 4,400 is the line in the sand there, and then you know the levels if you're day trading up through here as well. That 4472 there would be the target. Well, that whole group too there, 65, 72, and 80. Rightio. And crude is oil's fallen out of bed. Now, we were looking, as you know, we're looking for this 5 waves coming down through here. That's come down. We're looking for a retracement level. It never came back up to the 618. Not saying that it won't, but this pattern here so far is in a nice little ABC. I think it's a little bit small in comparison to this here. So this may just be the A wave, and this could be the B wave to here, and then there could be a C wave up through to this point here, or into this sort of area here. So that's a possibility as well. So what we need to do here is we just need to chill out a little bit. There'll be 5-wave sequence in this sharp move down through here, but on the retest of that, if that fails at 72 there and it rolls over to that point, then we know that it's starting that third wave to the downside through there, and we can look at 70, 68, and the medium level 65 is where the first decent bounce will come in. So basically here we're looking for 72 to become resistance at this point here, and that will help clarify that bearish move to the downside. Now, gold and silver, they're still pushing to the upside here, as you can see. It's touched on 1250 here, so it can fail at this 1250 here, but it's got some support on the 1230 here. If it's got support on here, then it's going to get to the next level. That's what it does. It will react here. If it gets above here and finds support on the 1250 after a bit of a correction, say something like this here, or even like this here, then we can see it pushing up to the 1272 and even the 1300 up here. Now at 1265 it creates a double top, and at 1265 is the double top there. We understand that a double top is never the end of a bull campaign, as Gann would say, so we'd obviously see some sort of reaction at the 1300 or anywhere from this point to this point in here, and pulling back and then finding support above that, and possibly pushing higher than that. So that double top would create a pattern that would suggest further upside from that. So we still need to see if it's going to sort of fail from there. And it's also a little bit like silver as well. Silver's got this particular high here, and if this high gets taken out through here, then this whole pattern through here sitting on 18, a minor trading level, becomes an accumulation pattern, and we'll be able to square that up in time. So we'll be able to take that distance through here in time and square it up with price, which would take us a fair way up through here. And this is why we've got this little third wave up here. So that's looking at that case, and then that would also make the wave count from this here is up for wave 1 to here, an A and a B and a C for wave 2 here, and this is the third wave pushing up here, and it's certainly got the characteristics of that. So it really needs to fail under this 1972 here, which is slightly sort of unlikely as well. And the other thing as well is that if the Dow does push down, then these two products would be seen as a possible hedge as well. So this is something that we need to sort of work out. We can see that quite confidently that the US dollar index will push up. But will gold follow it or not is the question. But this here tends to think that there's a lot more upside in that at the moment. So those gold stocks can still look quite good out there, Lihir and Newcrest and so forth. All right, well, I think that sort of covers it a fair bit. Yeah, so the euro is still sort of pushing to the downside as the US dollar is pushing up. The same with the Australian dollar here as well. The rejection of the 90 hasn't been rejected yet, but has reacted to the 90. But we've got a 5-wave sequence down through here, and we'll get some sort of little ABC back to this point here, and then that should fold over there. The 88.72 is support through here. You see that? So once that becomes the resistance there, then you can add to any longer term positions there. But it's the first reaction from the 90 here, and we just need to see what type of bounce we get here. This should be a little A, a little B, and a little C to about here somewhere, and 89.50, and then roll over from that point there. Yeah. Alrighty, I think that sort of covers it. So really just sort of recapping that, it's really about the Dow Jones, the actual index itself, not the CFDs. All these CFDs, different IG, CMC, Access, whoever and whatever you use, will all have different prices. So it makes it a little bit sort of tricky unless you're actually trading the E-mini futures contracts. but the actual index itself, the Dow Jones, which is just a touch under the 10,000, but market may not even be closed yet, so it may end up positive or negative. It's just sort of vibrating around there. But what we are looking for in due course is for this market to become resistance at 10,000, and that will be the trigger for a bigger bearish picture all round. Alrighty, good morning and good luck.